We have discussed about valuation and what pre-money valuation and post-money valuation is in the previous episode. So in this episode, I will be taking you more into how a company is valued and what are the different methods used for valuation, or what are the different criteria that affects the valuation of a company. So we might have read in newspaper, maybe say a company with a mere investment of say 1 lakh rupee get a valuation of 1 crore rupee. So there are different factors which affects this valuation. So I'll just take you through different factors that affects the valuation of a company. We'll list down one by one, and then I'll explain you like how it is affecting the valuation of a company. So the first one is the stage of the company. The second one is the competition from other funding sources. Third one is the experience of the entrepreneurs and the leadership team. Fourth one is the size and trendiness of the market. Fifth one is the numbers, and sixth one is the current economic climate. So we will go through one by one. So let us go through the first point, stage of the company. So the valuation of a company depends a lot based on at what stage your company is. For example, an early stage startup will be valued mostly based on their product and team. But at a mature stage, the startup gets valued based on their numbers and also their like kind of projections and future cash flow. And at a later stage, it may be based on supply and demand of the financing availability. So the second point that affects the valuation of a company is the competition from other funding sources. So for example, you have a very lucrative startup and your idea is kind of very innovative, and there are multiple investors who are actually bidding to invest in your company, then definitely your value goes up. So like kind of many investors coming in, definitely the value is going to increase. And the third point is the experience of the entrepreneurs and the leadership team. So if you are a first time entrepreneur, the value of your company may be less compared to the valuation that a kind of third time or fourth time entrepreneur may be getting. For example, if you look at the case of Bhavish Agarwal, like you all might be knowing about Bhavish Agarwal. He is the founder of Ola Cabs, he is the founder of Ola Electric and Kitram AI also. Three of these companies are actually unicorns, that is their valuation is more than 1 billion. So since he is a serial entrepreneur and he has made successful business, definitely the company that or the startup that he promotes get a higher valuation. Then the next point is the size and trendiness of the market. Like what market size we are addressing and what is the current trend. If you were to go to like kind of 4-5 years back during the COVID era, during that time there was a kind of boom in the education online edtech industry. That is the time when all the online edtech players got good valuation because everybody was moving into online education. So the market was there and the trend was completely towards online education. So at that point, the valuation of online edtech startups completely kind of rise to a very high. So the next factor that affects valuation of a company is the numbers. So I think numbers is very important. Me being a chartered accountant, particularly I focus a lot on numbers. So when I say numbers, the revenue of the company, the EBITDA, earnings before interest, tax, depreciation and amortization, those numbers really actually affects the valuation of a company. So maybe you might have heard about revenue multipliers and EBITDA multiplier valuations also. And the final point that I want to discuss is the current economic climate. So when I say current economic climate, a lot of macroeconomic factors also depends on the valuation. I will just tell you an example. So way back in financial year maybe 2019, 2020, 21 period, at that point of time the US Fed interest rates were very low and there was a lot of fund availability in the market. So people were actually investing in a lot of startups, and that is the time wherein a lot of startups in India got a very high valuation. But currently if you are looking at this point of time, the US Fed interest rate has gone up. Like when it was in 1920 or 2021, the interest rate were as low as 0.25 to maybe 1%. Currently now it is maybe more than 5%. So this difference has caused kind of a lack of fund availability in the market, thereby the startups being valued at a lower rate. So when people have a lot of fund with them, they actually tend to buy or invest more, even they are not actually worried about the valuation. But when the fund availability is low, they are definitely concerned about valuation and then the valuation goes down. So these are the major factors that affects the valuation of a company. Now, technically speaking, valuation is actually done by professionals, and the most common methodology that is adopted for valuation of a company is discounted cash flow method, which is DCF. So, in a DCF method, the future cash flows of a company is projected and they are discounted to the current rate using a discounting factor, and then we sum up all the things and then arrive at the valuation of a company. That is a bit complex terminology. We will actually discuss about it later. So these are the various factors and on what all basis a startup is valued. I think this episode is clear to you. In the next episode, we will be actually discussing a lot more about angel tax. Thank you.